Hello and welcome back to Time is Money, sponsored by TradeMonster.com, our sister company. That bell going off is reminding me that we do have our Invest Like a Monster seminar in New York City, March 7th. That's Saturday, March 7th. If you go to InvestLikeAMonster.com, you can see all about it. It's going to be a great event. We've got Guy Adami, my brother Pete. We've got Mark Fisher, an extraordinary speaker and brilliant trader. Vince Farrell, Dylan Radigan, we've got Aaron Task. I mean, you gotta avail yourself of it, folks. If you're in the New York City area, it goes from 8 in the morning until 4 in the afternoon. So you're gonna get 7.5 hours of good, solid lecturing about the markets. And as I say, I'll be sitting there with these folks, mixing and mingling with them, along with Aaron Task of Yahoo's Tech Ticker. So do make sure that you at least take a look at InvestLikeAMonster.com. Now, as far as how this week winded up going into Valentine's Day, volatility's hanging in there pretty good. We've seen volatility at the lower ebb of the recent range, but nonetheless still staying bid pretty firm at the 44 level or so for the VIX. Primary reason there, well, no one's certain what the Treasury's going to do and what the exact terms of whatever kind of money that do come out of this latest stimulus into the banks. Is it going to have cram downs? Is it going to have forbearance, and are they going to push off on the foreclosures and make that part of any monies that are given? A lot of these questions that I'm asking and that financial folks are asking everywhere are what's going to determine exactly what the rules of the game are. They're constantly changing. Geithner didn't give us, that's the Treasury Secretary, any real guidance as far as that, and that's why volatility is hanging here. If we did not have that, if we had one plan, even if it's the wrong plan, we would see volatilities stabilize at lower levels. But because we haven't had that, we see volatilities hanging, like I say, lower end, but still 44, which is unusually high, given that the markets, except for the one day this week when we made that 400 point or 5% plus move out of the Dow Jones, NASDAQ, and S&P, not justifying these kinds of levels. Certainly the other 4 trading days of this week didn't justify the move that we saw on that one day, and thus that big spike back up in volatility to 48. Come back from the break, and I've got 4 stocks next week that I'm watching for earnings, and I'm going to tell you how I'm going to play them right after this. All right, welcome back. Remember, InvestLikeAMonster.com, March 7th in New York City. That's Saturday. And remember that our sister company, TradeMonster.com, you can trade options for just 50 cents or stocks for just $7.50. And now they've got paper trading too. So when I'm describing these strategies to you, you could open a TradeMonster account, not even fund it. You could just open an account at TradeMonster, get real-time quotes, and basically open up a bull call spread, open up a strangle or a straddle or whatever it might be, and track exactly the profitability of that trade. Familiarize yourself with it. Once you're comfortable with it, we think you're going to be a better investor, and because the software is so great and easy to use, we think you'll be a TradeMonster customer too. But again, that's the other side of the business. I'm on the news and information side, so let me tell you at Option Monster what I'm talking about. Agilent Technologies, big measurement company. Stock is down from $38. It's less than half of that price right now. 38's 52-week high. Right now, Agilent, symbol A, like Apple. Earnings on Tuesday, and I'm talking about a 1750-20 strangle. Now, a strangle, folks, is where you sell the above the market call and the below the market put. Again, you can simulate that over at TradeMonster. If you did that, you're going to get a situation where, since I'm going to own the stock and I'm selling an out of the money call against it, there's no additional margin on that. Since I've sold the out of the money put, if the stock drops, I could have to buy stock, but at a lower level. So I'm averaging down at a lower level. Like I say, the stock is less than half the price that it was. It's basically trading $18.50 17.50. So by selling that 17.50 put and the 20 call, I'm collecting premiums on both sides of the market. Right now that's trading for about $1.36 that I'd keep after these earnings if the stock stays between 17.5 and 20. And in fact, if it runs north of 20, well, that just means somebody's going to exercise the call, take stock from me that I bought at 18.5. They're going to take it from me at 20. That's $1.50 profit plus the $1.36 on this. Call it $2.56 if this stock trades over $20. Not a huge move to the upside. On the other hand, if it moves to the downside, they could put stock to me at $17.50, but since I've collected $1.36 for the sale of the call and put, that means they'd be putting stock to me basically down around $16 a share for the other tranche. Again, that's Agilent earnings Tuesday. Also on Tuesday, Walmart, WMT. Walmart's down from $64 a share. It was one of the standouts in the S&P and the Dow last year. Now it's at 46 bucks, 52-week low. I think a great time to do the same strategy. So what am I doing in Walmart? I'm buying the shares and I'm selling the 45, 47.5 strangle. Same strategy I described in Agilent. I'm selling the out of the money 47.5 call against stock, so there's no margin on that side, and I'm selling the out of the money 45 put. In this case though, doing this out in March, I'm collecting $3.25, which means of course that if I am put stock, I'm not put stock at 45 folks, I'm put stock at $42 roughly, give or take, $41.50. So I love that, having a $46 stock that I like, Walmart, one of the best companies in the world, and I'm getting paid to be that insurance company. I'm selling that put and I'm selling the call. $3.26 is what I'm collecting roughly for this strangle in Walmart. Let's go ahead to the next day. On Thursday next week, or rather Wednesday next week, we get Hewlett-Packard's earnings. So that's Wednesday, Hewlett-Packard's earnings, HPQ. Stock's down from 50 to 28, so it's nearly cut in half. Then it rallies back up to 35, which is where it is now, roughly the 35 area. So what am I doing in here? I'm bullish on Hewlett-Packard. I think they will have a positive report. They already gave somewhat cautious but reasonable guidance November. I think they give a little more clarity here, and I think shares trade up. So how do I play it? Not buying stock. In this case, I'm buying the 35, 37.5 call vertical, or a bull call spread. I'm paying for that $1.20. So I'm basically paying the equivalent of $36.20 because I'm buying the right to buy it at 35. I'm paying $1.20 for it, so that's 35 plus $1.20, that's $36.20, and I'm giving somebody else the right to take it from me at $37.50. Bottom line, folks, if this stock just trades up a couple percent, I could end up with a double, because between 37.5 or higher, the spread goes out to $2.50. If I've paid $1.20 for it, you know my profit's $1.30. I doubled my money like that. Not always easy and not a sure thing, but I like our odds. Again, that's Hewlett-Packard, earnings Wednesday. Lastly, John Deere, also earnings Wednesday next week. John Deere from 95 down to 29. So it took a haircut of 2/3. Massive. The stock has rebounded to $36 a share. What do I want to do here? I think things are still a little soft, but demand for food around the world, that's not soft, that's still strong. What am I going to do? I'm going to buy John Deere at 36, and I'm going to sell the March 35 calls. So they're $1 in the money, and I'm collecting for those calls nearly $3. That protects me down $3 from where the stock is, because I own the stock, I've sold the call, I have no upside risk. They can take the stock from me if the stock's 35 or higher. Meanwhile, I've bought myself some insulation. I'm protected down to 32.55 on this, and I'm buying shares at 36. So I'm good for basically a 10% downside move. Folks, these strategies, every single one of them that I've outlined, are part of Trade Monster and that paper trading. You can see exactly how those play out. by opening an account at Trade Monster and then experimenting with various strategies that would fit whatever's appropriate for you. The bottom line is nobody else gives you paper trading, real-time streaming quotes right onto that trade ticket without a download other than Trade Monster. So we encourage you to check out our sister company, TradeMonster.com. I hope you have a great Valentine's Day weekend, and we'll see you back here next week because time is money.